So now, had you kept that money in a savings account, you would have earned 4% return on that entire 3 lakhs. But by keeping it in a sweep account, you earned 7% on some part of the money without sacrificing on the liquidity that you would get as in a savings account.
Sure.
So that's the advantage. And that's why I always recommend that everyone should have a sweep account. It doesn't take away anything from your liquidity of a savings account, but gives you the opportunity to earn a significant higher interest rate because the FD return starts operating on the money that you keep in a sweep account. So that was the insight.
Yeah.
With that, we thought it was a great product for consumers, and we built this campaign based on this insight. And the campaign was all about the fight between an FD and a savings account.
So that's the Ranveer and the
That's
Kirti
the
campaign.
Ranveer and the Kirti campaign, where one of them is a proponent for liquidity and savings, and one of them is a proponent of
and they're having a fight and they're going at it.
And the insight simply was the fact that's the way people believe. That, hey, if I need more returns, I will have to sacrifice liquidity.
Sure.
If I want liquidity, I will not get high returns. And on that insight, we built this proposition saying now you don't need to sacrifice liquidity for high returns because you have ActivMoney.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter. And on today's episode, I'm talking about the experience of banking. Don't usually get too many banks on our show, which is why I'm thrilled to have Rohit Bhasin, President Head, Retail Liabilities Product and Chief Marketing Officer at Kotak Mahindra Bank. We're going to talk about how you can make your bank account work much better for you. So folks, like I was saying, we don't usually get too many banks on our show, which is I'm always thrilled to have banks because a bank account is the most basic, probably the first financial product that all of us own, and imagine not covering that on this show. So last time we had Deepak Sharma in April of 2023, Manish Kothari in August of 2023 from Kotak Bank on our show, and it's always good to welcome another guest from a very esteemed bank and another perspective, another area. Rohit, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thank you for having me here.
Great to have you here. Rohit, you're fascinating. You've got an FMCG background and here you're in a bank and you're like the chief marketing officer. So how do you bring that FMCG product or that FMCG experience to something as mundane and as non-exciting as a bank account or bank?
Actually, that's a question that I get asked many times. I spent 25 years at an amazing company called Unilever before I made the switch to Kotak March of last year. And when I was really looking at this role, the one-line brief that was given to me by Uday, Shanti, the people who'd hired me, was how do you really bring consumer centricity into the bank? And I didn't really understand that very well until I joined the bank. And what I really realized that in a bank, and all the banks, it's not just about Kotak, banking as an industry is a very much what I call as the sales side of thinking versus the demand side of thinking. So you kind of decide, I want to make a product. These are the features I want to give based on what competition is doing, or on an Excel sheet, I've got 10 features. And then you tell your frontline sales to go push it. And you'll almost hear things like it's a push-driven product rather than a pull-driven product. And I kind of come from an industry where the role of product and marketing is to find real consumer insights, real consumer needs, build product and propositions which answer those needs, and then do amazing work on advertising, insightful advertising to drive awareness, create a pull, and the role of distribution is then just to service the demand. And I think that is the biggest learning that I've kind of brought into Kotak, that just start from keeping the consumer at the heart of everything we do.
Yeah.
And make that shift from a sales side of thinking to a demand side of thinking. How do I find real consumer insights, real consumer pain points? How do we then build product propositions which answer those consumer needs, those consumer pain points? And then use the power of advertising, using really insightful advertising, which is based on real emotional insights to drive awareness. And then, so that you can create a demand. Someone wants to buy my credit card, someone wants to buy my savings account, rather than my frontline sales having to go and just push it. That's really the big learning that I'm trying to bring in. And that's the cultural change that we're trying to do at Kotak.
Yeah, I'm going to go deeper into that. I just want one side question. What is an interview with Uday Kotak and Shanti Ekambaram like? I mean, I can probably do an entire episode on that, but how was that? I mean, what an interview that must have been.
Actually, it was amazing. Albeit, I must also acknowledge the fact that I was having severe I had a slip disc.
Oh my.
So, and I was sitting on a chair, and the moment I used to sit on a chair,
It'll pain.
I would have splitting pain on my left hand.
Yeah.
So here's Uday having a conversation with me, and I kind of wanting to stand up and run away because I couldn't kind of bear the pain. But kind of jokes apart, let me talk about Uday first. Uday is a fascinating individual. The amount of insights he has about building a business and growing a business. And he can talk to you about anything under the sun. Of course, that conversation is all about what have you done in marketing and what are your points of view about marketing. I think I felt he was trying to gauge more about what was my point of view, what was my philosophy, how did I really look at marketing as culturally, and what could I really come and do at Kotak. So we had kind of questions around Elon Musk. We had questions around Twitter as a channel, about what should we be doing at Kotak as a brand, what should the brand kind of stand for.
Sure.
Those are the kind of conversations which we had with Uday. With Shanti, it was a much more detailed conversation because I met her twice. And there it was more about just understanding how can I really drive consumer centricity at the bank. What have I done in my life? What has been my purpose in life? How have I chosen various roles that I've kind of done? How have I really found real insights about how consumers choose brands and products, and how can I kind of bring those insights into Kotak.
Amazing.
So amazing conversations, and then of course those conversations continued even once I joined, and every conversation with Uday and Shanti has been an amazing learning experience.
Yeah, so let's actually go deeper now into that, right? Because that's what I want to understand out here, that like I said, a bank account is the most basic thing, that the most basic financial product that is there. People talk about, we've done episodes upon episodes on sexy products like credit cards and complicated products like insurance and stuff like mutual funds, mutual funds have seen this massive surge in the last few years. But what do you do with the bank account? I mean, what are the specific aspects of customer experience and engagement that you've learned, or insights that you've learned, and you're now bringing it into a bank account?
So I think the first thing that one must always remember, that no one wakes up in the morning and says, I want to open a bank account today.
Okay.
Of course, you wake up in the morning and say, I want to buy a beautiful car. I want to really buy that bike that I've kind of been looking at. I've been thinking about moving to a bigger house, and therefore I need a loan to kind of do that. Or, I have goals for the next 15 years. I want to send my kids for education to a foreign university.
Yeah.
So people have goals in their lives, and money is a very important part of helping them meet those goals. So role of money is not about, having money. Role of money is being able to use your money to fulfill your life goals. And the bank account is just a medium where the money comes in and kind of goes out. And I think that's the way you got to look at it. It is the medium which helps you meet your life goals. And that's the role that a bank plays in actually facilitating the needs of aspirational Indians, the aspirations of Indians and people around the world. How can you kind of meet those? So that's the first context that you're going to look at that. The second thing is, how do you choose, which bank do you want to bank? When I started the role initially, Deepak gave me a very I was asking about his insights, and he gave me something amazing which has always stayed with me. He said, when you choose a bank to put your money in the bank, you always think from your heart, because it's your hard-earned money. Therefore, you'll always look at a bank which can be trusted. Trust will become the most important thing. Convenience followed by that. You can sacrifice a bit of the interest rate, but you want to make sure that your money doesn't kind of go away. So trust is the number one criteria, trust and convenience followed by technology in choosing a bank account.
Sure.
Well, when you choose a product where you want to take money from a bank, so you want to buy a credit card, you want to take a loan, you think from your mind, because which one gives me the lowest interest rate? You can kind of sacrifice convenience of service for an extent, but the thing that you really want to make sure is the offers, the interest rate is the best there. So that's the first difference between how you choose a bank account versus how you choose, let's say, kind of a loan product. I think other than that, because you're opening a bank account to fulfill a bigger need in life, you want, for example, you started a job, so you're a salaried consumer. You need a bank account, otherwise where will the money come? You're taking a home loan, so home loan needs a standing instruction of your EMI to go out from a bank, so you need a bank account for kind of that. you're taking a personal loan. Again, you need to pay
Or a credit card.
or a
yeah.
credit card.
Yeah.
So bank account is almost the backbone or the bedrock of any financial activity. And therefore, the first thing which is very important is convenience to open a bank account. If you're going to take 7 days to open a bank account, it's just unimaginable in today's world. And I know when we were kids and we would go with our fathers or mothers to a bank account, there would be like these detailed forms that you would fill. And after the form would be filled, then after 3-4 days, he would say your bank account is open or I need some other document. And then after that, some 7-8 days later, a checkbook would come and you'll start operating a bank account after 2 weeks. Today, it is instantaneously. We want to, on 811, which is our online account opening, you want to open accounts within 3 to 4 minutes. And the India digital stack has also enabled the account opening seamlessly. Now everything is linked to Aadhaar and PAN and your OTP on the phone. And by putting all of these things together, account opening is very convenient. So therefore, the first thing which we really want to pride ourselves with is how can we keep on improving the account opening journey so that he can easily open the account and easily operate the account. And the second thing is a mobile bank app. So most of the people don't go to the bank nowadays. They do. The mobile banking app is your biggest branch in a way. You do all your transactions there. And therefore, how do you move the person from to your mobile banking app so they can do all the transactions there? And therefore, the interface of the app, everything is seamless, everything is easy to use. So the most important thing on the bank account is convenience and ease of use, both in opening and using.
Interest rates don't figure out there.
Interest rates, in my view, is important.
We'll come to that.
But we kind of come to that. But people think about convenience and trust before they think of interest rates when it's about opening a bank
account. Yeah. So just a small, query for maybe our young parents out there. I know that I've had this query for the longest time, and I don't know whether there's a specific answer to that. What is the youngest age anyone can open a bank account?
You can open the bank account the day the kid is born.
Yeah, but you don't have a PAN card then, right?
Yeah, but you can open it as a minor account with the Aadhaar card. Okay. You don't need a PAN card to open the bank account. You need an Aadhaar card to open the bank account. Okay. Aadhaar is the point of identification.
So opening a minor account can be done at any age before 18, as young as possible.
Yes.
And you can do that online also. Does the parent need to actually go there?
In our bank, we do minor account opening with a physical form.
Right.
I'm not so sure about what every other bank does.
Okay.
The minor account is opened under guardianship with either of your parents.
Sure.
And your parent is your guardian till you turn the age of 18.
Very interesting.
And we have something called a junior account, which is a minor account. Yeah. And when you turn 18, then you convert yourself into a standalone adult account where you remove the guardianship and then you start operating the bank account on your own.
Yeah, because a lot of people have this, query now that kids and finance and money, when do we introduce them? And they talk about how, they give prepaid wallets and stuff. And I'm like, do you even have a bank account for your kid? And nobody really knows that. And then I don't know what the trend is nowadays about people waiting till the age of 18 or opening it before. But I used to always think for the longest time that the kid needs a PAN. And if you need a PAN, I don't know whether the kid has to also now start filing his income tax returns. That's why I had this weird
PAN
notion
is not
in my
mandatory
head.
for account. Aadhaar is required.
Folks,
and people open bank accounts for their kids for various purposes. So you might decide, for example, to start, let's say, investments on the name of the kid.
Yeah.
Because then that becomes a habit and it becomes kind of a recurring investment. And investment is all about the idea of compounding. And it's not about timing the market, but the time you spend in the market. Yeah. So that's what a lot of parents do: open a bank account and then through that do investments for the kid. Grandparents, like in my case, my in-laws, my mother, they would love to give cash gifts to their kids, and therefore, rather than giving it to the parent who would then go and deposit in his account or spend it, when you have a kid's account, then the grandparent directly transfers the money there, and therefore it's like building a corpus for the kid.
Can he have his own UPI code also? All of that is possible for the kid on the minor account. Is UPI there?
The bank account it's all linked to the bank account.
Very interesting. So folks, there you go. If you're interested in opening a bank account for your minor child, then you should consider walking into a Kotak branch and checking the product out. Okay, Rohit, you've been in charge of many successful campaigns like ActivMoney and the Gold Loan. So what have been your key learnings from all of these campaigns? The customer response or anything else you'd like to share?
So ActivMoney is a campaign which is very close to my heart, and I talk a lot about that. And I was telling you that it's a wonderful product. So first, let me take the opportunity of being on your podcast and telling everyone about why I think the product is a fabulous product and everyone should kind of use that. So what is ActivMoney? It's a sweep account. So what was the big insight that we kind of saw or unearthed when we were trying to really build that product and drive that? interest rates are the highest in many years in India. So you would believe that people would hardly keep money in savings accounts, and all the money lying in the bank accounts would be sitting in fixed deposits, because savings accounts give you about
Hardly.
2.8 to 4% return in top private sector banks and public sector banks, while a fixed deposit you can easily get for 7.5%. So it's like a difference of 3.5% between
Double
a savings
almost,
account and that one. But we were amazed to see that 65 lakh crores was lying in savings accounts. A huge amount of money still lies in savings accounts.
Wow, 65 lakh crores.
Yeah, and try to understand that why is so much of money lying in savings accounts, and then you kind of go back into the real insight of Indians. Indians, we've always been a scarcity country, and people have always kept a lot of money as like a
buffer.
In the event something were to happen to me or I need urgently, I would have money, and much more than what is required for kind of your liquid expenses, people would keep in their savings accounts. I said, hey, you're losing the opportunity of earning more money. But someone would worry saying, I don't have the liquidity like I would have in my savings accounts. And that's where we introduced this sweep product called ActivMoney. It's a simple product. Above 25,000 rupees, anything that you have above that goes into a fixed deposit for 6 months, earning 7%. But the interesting part is it's a fixed deposit which can be broken without any penalty. So let's say, you have a person who works in your company and you've, let's say, 3 lakhs in your account. So 25,000 remains in your savings account, 2.75 lakhs goes into your sweep account. And 2.75 lakhs is starting to earn 7% if you were to keep it for that 6 months period. But imagine you have to give a salary of 50,000 rupees to someone in your team. So that 50,000 rupees check, 50,000 rupees will be taken from your sweep account, come into your savings account, the check will get cleared, and the remaining 2,25,000 rupees will continue to earn the 7% interest. And then let's say the next month you again need 25,000 rupees. 25,000 rupees come from your sweep account into your savings account. You'll use that, and 2 lakhs will continue to earn. And the remaining 2 lakhs you don't use for the next 6 months, so that will end up earning 7% return. And whatever you would have taken out would have earned the interest for that duration. So now, had you kept that money in a savings account, you would have earned 4% return on that entire 3 lakhs. But by keeping it in a sweep account, you earn 7% on some part of the money without sacrificing on the liquidity that you would get as in a savings account.
Sure.
So that's the advantage. And that's why I always recommend that everyone should have a sweep account. It doesn't take away anything from your liquidity of a savings account, but gives you the opportunity to earn a significant higher interest rate, because the FD return starts operating on the money that you keep in a sweep account. So that was the insight.
Yeah.
With that, we thought it was a great product for consumers, and we built this campaign based on this insight. And the campaign was all about the fight between an FD and a savings account.
So that's the Ranveer and the Kirti
That's the
campaign.
Ranveer and the Kirti campaign, where one of them is a proponent for liquidity and savings, and one of them is a proponent of
and having a fight and going at it.
And the insight simply was the fact that's the way people believe. That, hey, if I need more returns, I will have to sacrifice liquidity.
Sure.
If I want liquidity, I will not get high returns. And on that insight, we built this proposition saying, now you don't need to sacrifice liquidity for high returns, because you have ActivMoney. You can earn up to 7% return in your savings account by activating ActivMoney.
Yeah, very interesting. So let me understand this in better. You're saying that this combines the best of both. It combines the savings and an FD.
Yes.
Today, if I don't have this, what I'm doing is I'm creating 2 buckets.
Yes.
One is my savings account and one is a separate FD account.
Yes.
So in my mind, both are different for different purposes.
Yes.
Saying you don't need to do that.
You don't need to do that.
With ActivMoney, I'm not incurring any penalty of any sort. I will get the FD rate for the period for which I've used that money. Have I got that right?
Yes. So an FD is a fixed deposit. So it is fixed for the duration that you take it. In the event you break it before that duration, you might be charged a penalty for a premature withdrawal. So, and that's why people the money that they don't need, they kind of keep it in an FD. The money that they think that they will need, they will keep in a savings account. Now, what ActivMoney is saying is that, hey, you don't need to make that decision. You just put all your money in ActivMoney, and when you need money, it will automatically come to your savings account, and the money which you don't need is earning a fixed deposit return.
Very interesting.
So it just simplifies your trying to keep buckets of this much money I need for 3 months, this much money I need for 8 months, this much money I need for 1 year. So you start making fixed deposits of different durations. So I don't have to do that. Just put it in your ActivMoney. If you don't need it, learn 7%. If you need it, learn the savings account return.
Interesting. Gold loans.
Yes.
Any insights out there? Because this is a product which I think for the longest time before the NBFCs made it popular was unorganized. People who wanted a loan against their gold, at least in smaller towns and cities, would usually go to a loan shark and then get shafted. And then it had its own challenges. Banks, of course, didn't really treat a gold loan like a popular product. But
Yes.
what's been happening there?
So you may have seen a lot of old Bollywood movies where the father and the mother go with their bangles,
Girvi rakh diya.
girvi rakh diya,
Yeah.
and the kind of pain that as if you've taken a
an
family
honor.
heirloom.
Yeah.
Just kind of picture this Bollywood movie where you've got the parents, they need to do something for the education of the kid, or they want to get him a bike for him to go to the office, and they have
शादी
to
करवानी है.
शादी
मतलब
करवानी है.
More popular
More popular
notions.
ones.
Yeah.
So you अपने कीमती जेवर आपने गिरवी
गिरवी
रखे,
रख
and it
दिए,
was like a
yeah.
painful moment of saying that this is like these are the jewels which my mother-in-law and her mother-in-law gave to her, and I'm kind of putting
पुश्तैनी
family
जायदाद,
पुश्तैनी
yeah.
जायदाद गिरवी रख रही हूँ. That was the perception of gold. The other perception of gold was that it was like the product which, or when you had no money left, that was the last thing that you would put on the table to get money against that. And that was the reason why people were taking advantage of that. But for us, the biggest insight was the fact that actually gold loan is one of the cheapest loan products available because it's a secured loan. And the difference between a personal loan and a home loan, or a home loan and a credit card, a home loan is a secured product. You put a home against that as a security.
Yeah.
And therefore the interest rates, when you have a security against a loan, the interest rates are lower. When you take an unsecured loan, the interest rates are higher because
Like a
the bank
credit
is
card,
taking
yeah.
higher risk.
Yeah.
A gold loan is a secured loan. You're coming in, putting your gold, giving the gold to your bank, and the bank keeps it very, very safely because that's the way you need to earn the trust of the customer. But I don't think anyone really understood it from that perspective. And that was for me the biggest unlock, where you explain to the consumer that it's a smart choice to take a gold loan because you're actually taking a loan people would actually take a personal loan at a significant higher interest rate. 18% interest rate on a personal loan where you can take a gold loan for 10%. Because I will not, it's like मैं अपने जायदाद गिरवी रख रही हूँ. And that emotional insight was what we wanted to challenge by explaining to consumers that it's a smart way to take a loan because you'll get a loan at a much cheaper rate.
Yeah.
And your gold is safe and you'll get it back after 6 months or 9 months or a year whenever you're able to return that money back. And once we found that insight, we built a proposition around a smart loan as the idea, and built a campaign which was basically telling people that there's this saying in Bombay that, or what is it called? I have forgotten the exact colloquial one, which is that things are lying very close to you, but you search the entire world around to do that. And that was the way we built the gold loan campaign. That gold is near you, but you kind of never think about using it to take a loan.
Very
so
interesting.
there's a smart choice and take that. So that's what we did. We did a pilot in Maharashtra and Karnataka, and we got some very good results on that one.
Just getting over that emotional or mental bump can actually unlock a source of funds which is lower than an unsecured loan for that matter.
And for me, it's always been about that, Anupam, which is what I've tried to bring into this role as well, that just find those emotional insights which can make your product relevant in the lives of the customers. When you do that, she rewards you by buying you. When you don't do that, you just have to keep on pushing and she doesn't find any need for you.
Yeah, very interesting. Rohit, I want to just understand the sweep account, the ActivMoney a little bit better. Maybe our audience can understand it if you tell us what it can be used for. I think you just gave me one example about maybe how it relates to a businessman, that he has to give salaries or whatever. So can you just talk about the use cases out here so that it hits better to our audience?
So, Anupam, the simple way of looking at it is that whatever idle money you have in your bank account, which no one makes their bank account balances zero. You keep your liquid cash, for making payments at the end of every month to your, workers. If you're a businessman, you got payments coming, payments going. You kind of always try and keep a balance to kind of buffer. You don't want to be out of money at any point of time. And therefore, there are certain short-term, you need money every month. Then there are certain quarterly payments. There are certain slightly longer-term payments. The simple idea is whatever idle money you keep in your bank account, you make it active by switching it to the sweep account, by switching it to the ActivMoney account. So that you don't have to then bother about trying to figure out what is the time that you need the money. Whether I need it after a month, 3 months, 6 months, whatever. Just put all your money that in your bank onto sweep account. The sweep product will itself take care of your liquidity needs and give you the right balance between liquidity and returns. And that's the way I kind of look at it.
Okay. I mean, it looks good for something like a rainy day fund or unforeseen expenses. It's quite useful for that.
Yeah. So whatever money we're keeping in a fixed deposit or in a savings account, just put everything in a sweep, because it automatically makes the decision between fixed deposit and savings for you, and you don't have to keep on thinking about that.
So now I want to go to the other side and talk about fixed deposits,
Sure.
right? Because people have this nice comparison and almost a debate at parties and conversations that happen and between friends. They just feel that debt mutual funds are better than fixed deposits. Okay, now I don't know go into the merits of that argument. Whatever, I have my own separate points of view, but you are someone who has a mutual fund also.
Yes.
Right? So you've obviously got debt mutual fund products. In fact, I think I've had Lakshmi Iyer on our show like really long ago, and she's managed at least at that point of time she used to manage the debt mutual funds at Kotak. And you've got a bank. Now here you are from the bank. First, I want to know what's your view on these two things. This entire debate, whether it's even a debate.
So look, in my view, you make money by doing the right asset allocation. What is most important is the asset allocation, rather than saying which is the stock to buy or which is the mutual fund to buy or which FD should I put my money on.
Mm-hmm.
Because if you look historically over the last 20, 30 years, every asset class goes up and goes down.
Correct.
And if you had the right balance of assets in your allocation, you will make money rather than being heavy about one asset. Because let's say if you're very heavy into stock markets and the market goes up by 30%, you're up by like 30%, you're feeling very happy that had I put my money into a fixed deposit and gained 7%, here I've got 23% higher. The next year the stock market falls by 50%. So you went from 100 to 130 and now you're down to 65. So you've actually kind of lost 35% on that. But had you kept money in all the asset classes, you would have kind of got the benefit of all the ups and downs and got a smoother return curve. So in that context, when talk of the fixed income or the debt allocation, which is where all the products like debt mutual funds, fixed deposits kind of come. So what is the difference between the two? Let me first talk about that. Fixed deposit is a fixed return. So let's say today if I'm saying that you've locked a fixed deposit for 3-year period at a 7.5% return, so you will be assured that you will get 7.5% return on that investment that you've kind of done. Now, a debt investment works in a similar way, but has a different view as well. So now let's say if you buy a debt fund, what do debt funds do? They buy bonds, ranging from government security bonds to corporate bonds. Now, if there's a government security bond which has been issued for a 25-year duration, giving let's say 7.5% return, if you were to keep that fund for the next 25 years and hold it till maturity, you will get the 7.5% return every year on that. But in that 25-year period, there will be times where interest rates will go up and interest rates will go down. When interest rates go down, the bond price is inversely related to the interest rate.
You'll land up making a loss or a profit depending.
So when interest rates go down, the bond prices go up. So that point of time, if you're holding a debt fund, you will have some capital appreciation because the bond that you've held, the price of that has gone up. In the event the interest rates go up, then bond prices will go down.
Lose value.
So if you are holding a debt mutual fund during a period where the interest rates are going up, you will see lower returns on your debt fund. So if you hold a debt fund for the entire duration, it works like a fixed deposit because then you are earning the whole interest for the duration. But during that period, it will go up and down depending on how the interest rate cycle is. So
Which is not the case with an FD.
Yeah. So if you're an investor who's saying, I don't want to take any interest rate risk, if you promise me 7%, I want to earn 7%, then fixed deposit is a better product for you. If you're a person who understands the interest rate cycles and you want to take advantage of the interest rate cycles, therefore, then you might be better suited to look at a debt fund. So the principle, the underlying coupon rate is like the principle of working is the same, which is both deliver an interest rate, but the interest rate is not varies based on how the interest cycle moves between a debt fund versus.
So as a banker, and you are a banker now, at least for the last 1 year, how do you think FDs can be used better? Probably for specific goals or whatever. There must be a utility for that as well. Any views on that? So
today interest rates are quite a high. We expect that over some time in the future, RBI, when the central bankers all over the world start to cut rates, I'm assuming RBI will also look at doing that similarly. When that will happen, then the interest rates will fall and fixed deposit rates will also kind of fall.
Okay.
So when you're sitting at a high interest rate cycle, I would suggest to people lock in a fixed deposit for a longer duration, the longest duration that you can get, because then you're kind of locking yourself to that long duration. Fixed deposit for me is, again, part of your debt allocation should go into debt funds. Part of it should go into fixed deposits.
Sure.
So whatever the equity allocation, don't mix the equity allocation with your debt allocation. So let's say my principal is 100 minus your age should be in equity, remaining
Very
should be
simple
another
one,
thing.
yeah,
So
yeah.
if I've decided that my age I'm going to have 35 or 40 in my debt allocation, then I'm breaking that down into some part of it going to fixed deposits, some part of it going into debt funds.
Debt funds.
Because my view on debt fund is for a longer duration, because I can't control the interest rate cycle. So I'm keeping that debt fund for a longer duration unless I'm very sure about an interest rate cycle. Interest rate is about to fall, and then I take a long duration debt fund where I take advantage of getting some capital appreciation.
Sure.
If I don't want to do that, then I'm keeping it for a longer term, and FDs will be a bit of a shorter interest rate cycle, because you'll not get an FD for
10 years,
10 years, etc. So that's how I would suggest recommending to people that interest rates are high, put some money into fixed deposits and lock it, and debt funds can help you take the advantage of when interest rates start to fall down. Then you'll get capital appreciation. So you do a combination of fixed deposits and debt funds to take both short-term advantage as well as a bit of a longer-term advantage. That's your debt allocation. I'm not talking of the equity allocation.
Okay, just winding down the episode now, last few questions. So a lot of people like to keep money idle in the bank. You gave me the number of 65 lakh crores. I think if I divide that by 140 crores, which is our population, I'm landing at a roughly 50K per person kind of a number. And that's for the entire population of India. Obviously, there are ups and downs. So, and a lot of people these days keep money idle in the bank because some banks are offering some great interest rates on the bank account itself. Few of them, of course. What are your thoughts on this keeping a large money idle, large sum of money idle in the bank account?
See, it's again, there's no right or wrong answer on this, Anupam. It's again the risk profile of the customer. Some people believe they don't want to take any risk. So the biggest advantage of bank accounts is that a lot of that is guaranteed by the government through the insurance that the government provides. So the perception really is that the money that you put in your bank is safe, much safer than what you put into your stock market. But at the same time, the risk that you take when you put your money into equity through mutual funds directly into the stock market, it's a risk-weighted return.
Yeah.
So I don't think there's a right or wrong answer. It's completely depending on your risk profile, and also what your age is and what your goals in life are. If you're 75 years old and you need regular liquidity, you don't want to be a part of a market cycle which the markets drop by 30% and might take 3 years to kind of recover that, then you will not be able to meet your goals. So for me, it's about understanding at what life stage the customer is, what are the goals that the customer has, and to meet the goals, what is the right investment allocation that the person must do.
Okay.
And at the same time, what is the liquidity that you need? Like I personally keep 6 months of my expenses in a liquidity fund. I used to put that in a liquid fund. Now I put that in the sweep product because the sweep product
ActivMoney,
behaves exactly like that. So that's my liquid investment. What I would believe for a rainy day I need money that goes into my bank account. Other than that is my investment corpus. And that investment corpus, based on my risk profile and my age and my goals, I kind of divide that between bank deposits, debt funds, equity funds, direct stock exposure, and various other products. So therefore, that's the way I look at it. There's no right or wrong answer. It's about your age, your goals, and the risk profile that you have in mind. Look at bank deposits as one of your, investment products.
That's a wonderful answer. Folks, so remember that if you're figuring out how much of money you need to keep in your bank account, remember there's no one right sum for everyone. Like Rohit said, look at your asset allocation. But here's the thing, Rohit. I want to now link this question to cyber security, precautions, tips, because you are also exposing yourself to a little bit of risk if you keep a large sum of money in your savings bank account, because that savings bank account could be linked to your UPI. Okay. So I want you to tell us and wind down the episode with this. Probably a nice checklist of precautions and tips that we should always keep in mind when we are operating a bank account, given that everything has become so digital these days and transferring money has become so easy now. So any precautions out?
Cybersecurity we're paranoid about that, in the sense that you don't want anyone to lose their hard-earned money. And I think we do whatever is required, both in terms of making sure our systems, our technology are keeping those issues in mind and are secure, and at the same time do a lot of work on educating consumers that they should not fall prey for any of these phishing or any of these frauds that they could be a part of. So few things in the sense that never share your passwords or your details with anyone. No one in the bank will ever call you and ask you to share an OTP or a password. If anyone ever asks you, that's a red flag. You should kind of never do that. Yeah. You'll see a lot of these, get rich quick messages which will come to you that, hey, you won a lottery, but to processing charges of that is 5,000 rupees, and you have to transfer 5,000 rupees to get that 1 lakh rupees that you won. All of these are fake. You should never kind of believe those. The other thing which is very prevalent is someone sending you a message saying, hey, by mistake I've sent you.
Oh yeah. This one is
20,000 rupees in your, and you'll see a message which is coming in saying, hey, you got credited 20,000 rupees. The first thing that you should do at that point in time is check your bank account. Because if you get a message that you got some money from someone, but it's not come into your bank account, that means that message is kind of fraud. So anytime you feel any of these get quick messages, or I've sent you money by mistake, or I've given you a job and you need to pay me some money for that, all of these messages are predominantly fraud messages, and you must not act on those. But sadly, there are a lot of people who do act on those, and they lose money. And sometimes older people,
more vulnerable.
More vulnerable. And there are some of these messages also will come where people are through artificial intelligence and deepfake impersonate a very close family member or a friend and say, I'm in need. Can you transfer this money to here and there? So, and all these people who are committing these crimes are actually quite smart and intelligent people, and they're one step ahead of everyone. So we just have to be careful. We just have to be cautious. And wherever you are in doubt, call up your bank. Call up your RM. Because that's the best way to, save yourself from the fraud. Don't take an action. If you're report that person, but call up your bank and say, hey, this is what I've got as a message. Is this a true or a false message? And the bank can help you and prevent that fraud from happening.
Folks, that is actually the most important tip and my favorite tip, that when you get anything suspicious in your email, in your SMS, or even an incoming call, believe me, the incoming call has also become a very nice way of fooling people. Call your bank, call your relationship manager. It's very easy now. I think phone numbers are there. On the back of your debit card, just flip your debit card and you'll see a phone number out there. Just call your bank. That's it. That also ensures that you're leaving a trail and you're raising a flag on that very valuable list of tips that have been given by Rohit. Rohit, we are done. Our standard question, our final question, our last question is any book recommendations for our listeners, if at all you're reading anything right now.
I recently read 2 books which were recommended by a new CEO. One was Competing Against Luck, and the second book is The Secret Lives of Customers. And I would really recommend both those books to your listeners. Again, tells you, both the books are all about how do you really understand what the customer needs are, and how do customers choose brands or products which actually answer those needs. And when brands or products don't answer those needs, the customers fire them. So it's like hiring a brand to serve those needs and firing a brand when it doesn't serve the need. And how you don't want to be the brand which is fired by your customer, but always be the brand which is hired by a customer. And you can only do that if you really understand what your customers want, keep customer at the heart of everything you do, and just build everything around that. So those are the 2 books which I've read recently, and I love those.
Competing Against Luck and The Secret Lives of Customers. I love the title of that.
Yes.
Good stuff. Folks, that is it. That is a wrap on this episode of Paisa Vaisa. My guest, Rohit Bhasin, President, Head, Retail Liabilities Product and Chief Marketing Officer, Kotak Mahindra Bank. Rohit, thank you so much for doing this for our listeners.
My pleasure, Anupam. So nice to be here today. Thanks.
Thank you.